Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market alert for Thursday, July 21st. A barrage of economic news, corporate earnings, and M&A activity seems to be pulling the markets in opposite directions this morning, and the result is not much movement ahead of the bell. Investors around the world also have their sights set on Brussels, where Eurozone leaders are holding a summit on the region's sovereign debt crisis. Overnight, German Chancellor Angela Merkel and French President Nicolas Sarkozy agreed on the terms of a new bailout plan for Greece, which will be presented at the summit. Media reports suggested the plan could include a selective default on Greek debt, and that's weighing on the euro. The dollar is also stronger against other major currencies, which is pushing crude oil down to around $98 a barrel. But gold is rising back above $1,600 an ounce.
Some disappointing economic news out of China also seems to be putting a damper on investor sentiment this morning. The HSBC Market Flash Purchasing Managers Index showed that Chinese manufacturing activity contracted this month. It was the lowest reading in more than 2 years, and it could raise concerns about a slowdown in an economy that's seen as a barometer of global growth. On the U.S. economic calendar today is the weekly reading of initial jobless claims. We'll bring you the results of that report after the opening bell. Then later this morning, the Philadelphia Fed will release its survey of business conditions for June. And we'll get a look at the Conference Board's index of leading economic indicators.
In M&A news, we have a huge deal in the healthcare industry to tell you about. Pharmacy benefits manager Express Scripts is buying rival Medco Health Solutions for more than $29 billion in cash and stock. The per-share price of $71.36 represents a 28% premium over Medco's closing price yesterday. And today, the stock is coming close to matching that level, up 23% right now. Express Scripts is also solidly higher in the pre-market, gaining more than 7%.
Technology stocks will be back in focus this morning, following earnings from a couple big names after yesterday's closing bell. Intel's profit and sales figures topped Wall Street estimates, but investors seem concerned about the chipmaker's plans to increase spending from previous forecasts. That's pushing Intel shares down 2% ahead of the bell. eBay is also likely to open lower after its second quarter earnings fell 31%. Despite the decline, the results still beat expectations. But the big movers in the tech sector today may be a couple European companies. Shares of Nokia are rallying 4%. Despite reporting a quarterly loss and a drop in sales, the Finnish mobile phone giant said it's making better than expected progress toward its long-term goals and has a clear strategy to address concerns about its competitiveness. But rival Ericsson is tumbling 9% after its second quarter numbers missed estimates. Ericsson said its results were hurt by the strength of the Swedish krona during the quarter.
After today's closing bell, another tech heavyweight will report its quarterly earnings, Microsoft. And the corporate earnings continue to roll in this morning. 2 more members of the Dow Industrials are out with their results, AT&T and Travelers. The earnings calendar also includes Morgan Stanley, PepsiCo, and UAL, the parent of United Airlines. We'll bring you all those numbers and the latest jobless claims figures after the opening bell.